Hey, okay, welcome back to the Excel chart lab. We're taking a brief detour here over to Google Sheets. Okay, before we get started, of course, let's just get ourselves all set up. Pop out chart. There we go. We're taking a brief detour today. It has to do with Google Sheets, okay? But first, the introduction. Today we're going to use Google Sheets to forecast price movements for the Google Growth Fund, for the Vanguard Growth Fund. We'll walk through this data setup, apply a forecasting model, and focus on how to read the trend without overcomplicating the math. All right? But first we get started, of course, the disclaimer. This Excel tutorial video is for educational purposes only. It is not for financial, investment, or trading advice. All right. So let's just pull up our system here, our data here. I will mention the actual forecast is going to be done using an add-in called Simple ML for Sheets. I'll include a link to the to the documentation for this for the add-in in the description below. Now, because this is a Google Sheets, it'll be online, but so you won't actually be able to download it. But the math is very simple. Okay, so we're going to start out. Again, this is the Vanguard Life Strategy Growth Fund. We're starting out very simple. We're saying pull the most recent 365 days up until today, give its daily data, the closing price, and the stock symbols. Come over here to our forecast page. Okay, as you can see, we have a few columns added here, and even a few things added over here also. We'll come to that in a moment. All right. 20 moving average, 50 moving average, 100 moving average, a standard deviation, the Bollinger Band lower band, and the Bollinger Band's upper band. So we're going to plot moving averages. We're going to calculate and plot the Bollinger Band chart. Okay, so let's start over here with our deviations, or with our prices. Okay. We'll come down here to 50. What is that? Well, that's interesting, isn't it? Huh. It automatically figured it out, didn't it? Interesting. Good. Then 100 moving average. Let's see if it's going to guess the value for the 100. It did. Look at that. That's pretty spiffy. I didn't realize it would do that. Okay. So now let's come over here to the 100-day. Okay. Then we'll come over here. We're going to use the query function. Okay. To pull the data. So this says select all the columns from this data this data set over here, where A is date, is greater than date. Then this says the net what follows is a date value to this date. So what we're looking at the most recent 6 months worth of data. So let's begin with that simple plot. Okay, let's plot in a few of the moving averages. Click over here. Okay, so that's not too bad. Okay. So, 100-day moving average. Now for investors like us, the 100-day to 50, 100-day is more important than the 20 and 50-day. Okay, because we're looking for our price to stay above the 100-day moving average as a good investment. Okay. But if we're looking for a little more active investment, we can look at this and we can say, well, you know, when the 50-day crosses above or below, that could be a trading indicator, or not, or not. If it crosses from above to below, that could be indicate a bullish sentiment. If it crosses, if the 21 crosses from under, or even the 50, because sometimes people use 5100s. But it's essentially moving averages are always trading indicators. Are very popular. Okay, moving averages. Some people like to curse moving averages, but the fact of the matter is, you cannot do stock analysis without moving averages. Why? Because the moving averages can stand on their own. The moving averages are part of the RSI plot. They're part of the Bollinger Band plot. Okay, and they're probably part of a few more other indicators also. So now we got our basic plot here. Let's do this. Let's come down here. Let's do 45 and 53. What do you think? Yeah. So we don't actually see a crossover in the last 6 months, the last 2 quarters, do we? We see that the 21 does cross slightly below the 50 and 100. Okay. And we don't see the 100 crossing the 50 crossing the 100, the 50 crossing the 100 anyway. And we don't really see the 20-day crossing below the 50 or the 100. It does kind of dance along the line right here. Okay, so there's our first plot. Okay, that is our Bollinger. That is our first plot for this evening. So we put a little dashboard over here, okay? Alright. So now I'll come back over here. Now we're going to do the fun stuff. Now we're going to begin to plot the standard deviation, okay? And the standard deviation is the standard deviation of the closing price, a rolling 21-day standard deviation. Now, in case you don't know, the difference between the S and the P is the S means the entire population, the entire data. We don't have the entire data set, population of stock price. We only have 6 months data. So this is why I'm going to use the S. Okay? You come over here. And do this. Now this one's going to be dragged down by hand, okay? Is this right? I always get this wrong. I can never remember. No. It's the standard deviation, okay, of the, I think it's a standard deviation of the moving average. You better tell me, look at it. No, it can't be, can it? Because it starts here. Okay, I always forget whether or not this is the standard deviation of the price, well, no, it can't be a 20-day moving average of the standard deviation of the average, okay, because we don't have the first 21 days. So we can come back over here and do this. Okay, the trouble is this. Get rid of this. This is the these are the values for the forecast. Okay, these are come back to them in a moment. But this is the value. This is a date series that the simple ML leads to forecast. So now we got our standard deviation. So now we come over here and we say equals average minus 2 times the standard deviation. Now does this look reasonable? It does, it looks reasonable. Then we come over here, we do the same thing, average, but this time it's plus 2 times the standard deviation. And now, my friends, we got everything we need. And of course, as always, be sure to stop by the chat session and say hi, okay? I will also mention, if you're an Excel person like me, you will see some Excel videos how to do Bollinger Bands, MACDs, RSIs, and moving averages on the Excel Chart Labs channel. And there's individual videos, and there is playlist to help guide you through the series. Okay, so let's come over here. Okay, so now we got the last 100 days. Okay, we say close. Right. Let's try a little insert chart. Okay. Go over here. Maximum value 45. Okay. And let's try maximum value 53. Just for the fun. Let's make this 46. Okay, good. And here is our is your Bollinger Band plot. Okay. Now, the width of the bands indicate the volatilities. The blue line is our closing price. The red line is the 20 moving average. Upper line The upper band is what? Is the average plus 2 times the standard deviation. The green line is the average plus minus the average minus 2 times the standard deviation. So basically what you're looking for, you're looking for it to move up and down between the two bands, okay? Up here, the bands stay, there's a little bit of volatility here, but more volatility up there. But come back over here, and the bandwidth pretty much stays the same. And you can see that the price is pretty much moving above the moving average line, okay? It spends more time above the moving average line than it does below, which is probably a good sign. Up here, when it goes from way down here all the way up to here, well, that, my friends, is indicates more volatility. All right, and you could look down here and say, well, when it touches here, that may be bullish momentum, possible buy opportunity. If it touches the top, this could indicate a reversal or negative momentum. Of course, I'll just repeat again that this video is not intended to be financial advice. It's not intended to be used for financial investing or stock trading whatsoever. This is simply a demonstration of how to use the Google Sheets to plot financial data, okay? So there you go. There's your second plot. Now we can also very easily do things in here like, you know what, let's do? Let's create a dashboard. What the heck? Dashboard. Let's come back over here. Let's take this little plot over here. There. And now we come over here. There. What? That's odd. Oh. What we can do now is so there's the two plots. Okay? Bollinger Bands and standard deviation. Let me come back over, since we got this space over here now, we can now come over here. Okay. We can do other things. Let me see, what else can we do here? Oh, we want to do a forecast. I'm sorry. Let's move on to the forecast now. See what let's do. Let's come over here. Let's move these over here. Oh no. Okay, well, let's come back over here then. Let's recreate our two plots, okay? But let's just do close 50 and 100, okay? Insert chart. Okay, so there's our 50, 100 and moving average. And now let's do the now let's do our Bollinger Bands. Because we're going to insert another problem. We're going to insert an example of what's sometimes called a channel. Okay, well, we actually can't do it, can we? Because all we have is close. Insert chart. Okay, good. Now here's our Bollinger Bands back, okay? So there's our first two plots. Moving averages and Bollinger Bands. Come back over here now. Suppose we come back over here. We change this. And we say all. Suppose we want to include interesting. Interesting. So, price is close. What the heck? Now, needless to say, in Excel, this isn't nearly this complicated. The reason we're doing this is you would think there would be a way let's ask ChatGPT oh, that's right. Oh, Okay, it's right. Why? Because part of the reason is, first of all, this is a mutual fund, right? What about volume? Can we pull volume? Formula using H. Interesting. Interesting. This is kind of annoying. Okay, so apparently we can't do that. We can't come over here and say, oh, give me price and volume, all right? Which is kind of odd, isn't it? Okay, so let's stop and meditate. Is there something else we can do with just to close? What about, I know 30 minutes is long enough. Unless someone pops in a chat session, I'm going to show you how to do a forecast, and then that'll be it for this evening. Again, we're using an extension called the Simple ML. All right. I'll include this in the. I'll include this. I'll include a link to the. I'll include a link to the to what? To the Simple ML sheets for sheets function right in the description. Okay. So for a forecast, here's the date you want to forecast. All right. Where are we going to forecast them to? And all we do, we select these two rows, extensions, start. That'd be interesting to do a forecast on the moving average, wouldn't it? Let's do a forecast on close and the moving average, okay? Just for the fun of it. Forecast. Now again, the purpose of these forecasts is this is really a demonstration of the this is really a demonstration of the Simple ML add-in. This add-in is not optimized, if you will, for is not optimized for what? This is not optimized for stock market prediction, okay? So now to think about these little plots, you come over here, you can come down to here, okay? We can zoom in. That's one way. So you can see this is the prediction for the 20-day moving average. Interesting. And this is the prediction for the close. Interesting. So what do you think? This is saying the price is going to go up. You know, what the heck? For the fun of it, let's just forecast all three moving averages, okay? Here. Let's just have a little fun with this, all right? Forecast, let's come over here. This way, I'll allow you to pick your poison, okay, as it is. And here we go. Interesting. Okay. So you come up here also, and you can click. You say zoom 1 hour, 1 day, 5 days, 1 week, 1 month. Let's do 1 month. That's a little bit too close. What about 3 months? So what we're saying is for December, what is this, 6 months? Okay, so here we go. For the 6-month period, all right, we got all three forecast levels here. This is the closing price forecast. The yellowish orange is the forecast for the 20 moving average, and then you can see that the 50 and 100 moving averages are pretty close, aren't they? Let's just come back into 3 months, shall we? Yeah. So you can see this is the 100-day. This is the 20-day. The 100-day is sort of the purple one there, which is pretty close to the green, which is, so we got the 50 and 100 are pretty close. Okay, here's the closing price forecast. Here's the 100-day forecast. No, here's the 20-day forecast. Let's zoom in to 1 month so we can see the more close. Okay, so here we go. This is 20-day moving average forecast. This is the closing price forecast. This is 20 moving average. Then the purple, the darker purple, is a 100 moving average, and the green, which you can't barely see, the 50 and interest in the 50 and the 100s are pretty much the same. Okay, so there you have it. 1 year. There you have it. A forecast for the Vanguard Growth Fund for January 2025. And as always, do me a big favor, click that like button for me this evening, okay?